Hello, and welcome back to the channel. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5, one clear idea at a time. Today we're examining an expert advisor called 3-line break reversal. It's built on a classic price transform developed by Steve Nyssen, the 3-line break chart, and it uses the average true range to size its protective levels. By the end of this video, you'll understand how this strategy maps price into blocks, how it decides that a trend has genuinely flipped, and how it enters, exits, and manages a trade. Let's get started. So what exactly does the 3-line break reversal expert advisor do? At its heart, this strategy rebuilds the chart in a completely different way. Instead of plotting one candle for every fixed time period, the 3-line break method draws a new block, or line, only when price closes at a fresh extreme. If the market pushes to a new high while an up move is running, the current block simply extends. Small wiggles that fail to make a new extreme are discarded entirely. This means the chart filters out a great deal of routine noise and holds onto the prevailing direction through choppy conditions. The strategy trades on a single symbol and a single time frame, whatever chart you attach it to. Because everything reads the primary time frame, you can study it on the 15-minute chart, the 1-hour chart, the daily, or anything in between. It is deliberately indicator light. The only classical indicator involved is the average true range, and that is used purely to measure volatility, so the stop, the take profit, and a small noise buffer all scale with current market conditions. The central idea is the reversal rule. A trend is only considered to have flipped when a close breaks beyond the extreme of the last several blocks, classically the last 3. Because a reversal has to overcome the combined range of several prior blocks, a flip represents a meaningful change of regime rather than a momentary flicker. When that happens, the strategy stops and reverses, closing any position facing the old direction and opening a new one the other way. Who might find this approach interesting from an educational standpoint? It's aimed at traders who want to study trend following and regime detection, and who prefer a rules-based, structural view of the market over a cluster of oscillators. As always, remember this is for learning only. Trading carries real risk, and losses are part of the process. Nothing here is financial advice. Let's walk through the exact logic, step by step. The expert advisor works on closed bars only. Once per newly completed bar, it reads that bar's closing price and the current average true range value, and then feeds the close into its 3-line break structure. Here's how the block structure updates. The very first blocks are seeded from the opening closes, so the strategy knows an initial direction. After that, each new close is compared against the current block. If an up move is running and the close makes a fresh high above the top of the last block, the block simply extends upward and no trade is taken. The same applies in reverse for a down move making a fresh low. This is the continuation case, and it is deliberately quiet. The interesting moment is the reversal. Suppose a down move has been running. The strategy looks back over the last several blocks, up to the number set by the LinesToBreak parameter, which defaults to 3. Because the tops of a down run step lower and lower, the earliest block in that window holds the highest top. That highest top becomes the level a bullish reversal must clear. The strategy signals along only when the close pushes above that level by an extra cushion equal to the reversal ATR fraction times the average true range. That cushion, defaulting to a quarter of the ATR, keeps tiny overshoots from flipping the trend. The short side is the mirror image. During an up run, the earliest block in the window holds the lowest bottom, and the strategy signals a short only when the close breaks below that bottom by the same ATR-based buffer. When a flip is confirmed, the expert advisor manages the trade in a stop and reverse fashion. It first closes any existing position carrying its magic number, then opens the new trade in the flip direction. The protective stop is placed at a distance of the ATR stop multiplier times the ATR, defaulting to 2 times ATR. The take profit is set at the ATR take profit multiplier times the ATR, defaulting to 3 times ATR, giving a reward to risk framing of 3-2. A position can also be closed early if the trend flips again before either level is reached. Every distance scales with volatility, so the trade adapts as the market's range expands or contracts. Let's read through the core of the meta editor code you see on screen. At the top are the input parameters you can adjust in the strategy tester. LinesToBreak sets how many prior blocks a close must overcome to flip the trend, defaulting to 3. Reversal ATR fraction is the noise cushion, a quarter of the ATR by default. ATR period, ATR stop multiplier, and ATR take profit multiplier control the volatility measurement and the protective distances, and lots sets the trade size. Now look at the two signal blocks. For the sell side, the code reads the relevant bottom into a variable called break bottom, then checks whether the close is below that level minus the buffer. When that condition is met, it records a new down block and returns -1, marking a downward flip. For the buy side, the code reads break top, the highest top of the recent blocks, and checks whether the close is above that level plus the buffer. When that's satisfied, it adds an up block and returns +1, a bullish flip. Below that, once a flip is confirmed, the stop loss and take profit are calculated. For a long, the stop sits below the entry by the ATR stop multiple and the target sits above by the ATR take profit multiple. For a short, those distances flip to the other side. Finally, the code calls trade.buy for a long flip or trade.sell for a short flip, passing the lot size, the stop, the take profit, and a descriptive comment. That's the whole engine. A compact break rule feeding a stop and reverse order. It is intentionally lean and readable. Let's bring the logic to life on this illustration. Remember, this is a simplified educational sketch, not real market data. Across the chart, I've drawn two dashed horizontal lines that represent the three-line break levels the strategy watches. The lower green line is the upflip break level at 1.0874, and the upper red line is the downflip break level at 1.0888. Follow the action from the left. The first handful of candles form a clean down move. Each close prints a little lower than the one before, so in three-line break terms the chart is stacking a run of down blocks. Notice that the strategy is completely patient here. It is not trying to catch a falling market or pick the exact bottom. It simply lets the down run extend, block by block, and waits. Then the mood changes. A candle bounces off the lows and starts to climb back toward that lower green line. The first push-up is not enough on its own because the close is still sitting inside the recent block range, so the strategy stays flat. On the next candle, though, the close pushes clean above the upflip break level, and it does so by more than the small ATR cushion. That is the confirmation the strategy has been waiting for. The down run is judged to have genuinely flipped. The buy flip marker prints, and a long position opens right there. Watch what happens after the buy entry. Price accelerates upward, printing two strong candles that each make a fresh high. Because the move keeps extending in the same direction, the block structure keeps stacking up blocks and the trade is allowed to run. Price reaches the take profit target, set 3 ATR above the entry, and the long is booked. That is our complete long sequence. A patient wait through the down run, a confirmed break above the level, and a steady run to the target. Now the chart sets up the mirror image. After the peak, price forms a short-up run of its own near the highs, then begins to roll over. A couple of candles drift lower, edging back toward the upper red line, which is the downflip break level. Just as before, the strategy does not react to the first soft pullback because the close is still inside the block. It needs a decisive break. That break arrives. A candle closes below the downflip break level by more than the ATR buffer and the sell flip marker prints. Because this expert advisor is a stop and reverse system, any remaining long exposure would already be closed, and a fresh short position opens in the new direction. From there, price follows through to the downside, printing lower closes across the next two candles until it reaches the take profit target set 3 ATR below the short entry. The short is booked, and the illustration is complete. Step back and look at the shape of what happened. In both trades, the strategy did the same three things. It waited through a run without trading. It demanded a close beyond the multi-block break level, plus a volatility cushion before acting. And it managed the trade with an ATR-based stop and target while staying ready to stop and reverse on the next confirmed flip. That is the entire personality of the three-line break reversal approach in one picture. A structural, patient way of defining when a trend has truly changed. Keep in mind that on a real chart, not every break follows through, and losing trades are a normal part of any strategy. That brings us to the end of our look at the three-line break reversal expert advisor. We covered the idea behind the three-line break chart, the multi-block reversal rule that defines a genuine trend flip, the stop and reverse trade management, and how the average true range scales every protective level. I hope this gave you a clearer picture of how a structural, transform-based approach to trend following can be automated in MetaTrader 5. Everything in this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. If you found it useful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment telling me which strategy you'd like to see next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.